more on trigger leads. Now, remember last week we talked about how a trigger lead is a situation. I just had this happen again this week. I had started 2 new purchase loans, and in both instances, I had the borrower, after we started the process and pulled their 3-bureau hard pulled credit report, both of my borrowers commented that they started getting calls. And so, again, that happens when a hard inquiry, a mortgage inquiry is created. That creates an opportunity for the credit bureaus to sell that, your contact info, to mortgage originators, who then call you and frankly try to pressure you into abandoning who you started your process with and go with them. So given that that's happened a couple of times on new customers of mine this week, I wanted to let you know that legislation was just announced or introduced last week, HR 2656, called the Trigger Leads Abatement Act of 2023. So that's good news, because I think that's well overdue. And I think it's the right step to try to get these trigger leads and the process of trigger leads a little bit under control. Now, given that that's good news, this legislation, it's going to take some tweaking, because it's got some, or it lacks some features that I think is going to be necessary and is already being talked about in the financial world. The first item is there is a general belief that there should be a carve out for mortgage servicers. Now, a mortgage servicer is simply the lender that you currently make your payment to on a mortgage. And the argument's being made, and I think it's valid, that a lender with thousands of loans that they're collecting payments on, they do have an interest of trying to maintain that portfolio. And if there is a customer who's looking to get a new loan, particularly if it's a refi, that mortgage servicer wants the opportunity to contact that borrower and see if they can make them an offer to keep them in their portfolio. So I think there's some discussion about that occurring. Then the next thing is the legislation really is lacking what we call guardrails to prevent deceptive practices. And what we mean by that, and many of my customers have reported this, the number of calls you can get, and basically the approach of the calls can be pretty aggressive. And in some cases will throw out verbal offers that appear to be the old, not too good to be true type of situation. So there is a belief that this legislation, while a good start, needs to have some better protections in terms of deceptive practices. And then the last thing is this legislation does not actually offer an opt-in opportunity for a borrower. And again, that's being discussed as something that is probably, or that is lacking in this legislation and should be discussed and maybe added to it. So just be aware that, that process is underway. I'm hopeful that this will cause some improvement in the whole trigger lead process and experience. But in the meantime, as I posted last week, a reminder, you can opt out from credit and insurance, by the way, offers by going to optoutprescreen.com or by calling 1-888-5-OPT-OUT, 1-888-5-OPT-OUT. Or you can go online and you can find out more about trigger leads, and in particular, pre-screened offers at consumer.ftc.gov. So again, that's what I wanted to just update you on with regard to trigger leads. Hopefully, whenever you get to a point where you're looking to get a mortgage, either you've already opted out, or maybe this legislation has finished the process, isn't in place, and you'll be more protected from that kind of aggressive soliciting from mortgage originators.